Hi, my name is Joseph Rand. I'm with homebuyertaxcredit.com, your best resource for information about the homebuyer tax credit. I'm here to talk to you today about 5 things you need to keep in mind about the homebuyer tax credit. And we do hope you'll get a chance to check out homebuyertaxcredit.com, which has all the information you might need, all the different resources, including an eligibility test, a test that you take. It takes about a few minutes. You answer about a dozen questions, and we'll actually tell you whether you're eligible and what kind of tax credit you can get. It has all the conditions and restrictions built into it, so you can go through it. When you get to the end, you'll get a recommendation, which we'll just remind you should always check with your accountant. We're not accountants. We're not here to give tax advice, just information about what's going on with the law. So you'll find other things on homebuyertaxcredit.com and FAQ, scenarios. We have a blog to give updates as they come in, as we learn more about the tax credit program. So what are the 5 things we need you to keep in mind, the 5 things you need to know about the homebuyer tax credit? Number 1, it's not just for first-time homebuyers anymore. The tax credit that applied all the way through 2008 and for most of 2009 did apply just to first-time homebuyers, but in November of 2009, Congress expanded it. And so now it applies not just for first-time homebuyers, but also for certain long-time homeowners. So what are the eligibility requirements? Well, in terms of ownership history, to be a first-time homebuyer, you can't have owned a home that you lived in over the last 3 years, the 3 years prior to closing. Can't have owned a home that you lived in prior for the 3 years prior. Now, that doesn't mean you can't ever have owned a home before. You might have owned a home 10 years ago, and you might have sold it 5 years ago. As long as over the last 3 years you haven't owned a home you lived in, you qualify as a first-time homebuyer. Okay? What about long-time homeowners? To qualify as a long-time homeowner, you have to have owned a home that you lived in, and it has to be the same home for 5 years out of the last 8, 5 consecutive years out of the last 8. So if you've lived in a home that you own for 5 consecutive years out of the last 8 years, you qualify as a long-time homeowner. You don't have to live there now. You could have moved out a year ago. You could have spent the last year living with friends. You could be living with your family. You could be living in a box for all anybody cares, so long as you owned a home for 5 consecutive years out of the last 8, and that was the same home, and you own that home, and you lived in that home, you'd qualify as a long-time homeowner. So what's the second thing you need to know about the homebuyer tax credit? That the income levels have been raised. A lot of people looked at the program a year ago and said, well, I'm never going to qualify because I make too much money. But those income levels are a lot higher now, okay? For a single taxpayer, or if you're married but you file separately, you can make up to $125,000 and get the full tax credit, which is $8,000 for first-time homebuyers, or $6,500 for what's called the step-up long-time homeowner buyer. So that's $125,000 for singles. If you are a married couple and you file jointly, you can make up to $225,000. $225,000 you can make and still get the full $8,000 as a first-time home buyer, or $6,500 as a repeat step-up buyer. Okay? Now also, there's a phase-out range, $20,000 above those limits. So from 120 to 140, 125 to 145, or 225 to 245, in that phase-out range, you can get a partial tax credit based on how far into that range you go. Okay? Now, what income qualifies? It's called your modified adjusted gross income, or MAGI. And from the layperson's perspective, it's basically what we think of as income. It's your salary, it's your wages, it's your capital gains. It's anything that came in that you collected as income is probably part of your MAGI. So if you're at all close, definitely talk to your accountant. Third thing you need to know about the homebuyer tax credit are the deadlines. The deadline to be in contract is April 30th. The deadline to close is June 30th. You need to both be in contract by April 30th and close by June 30th. If you're already in contract, if you got into contract last summer, you got into contract 10 years ago, nobody cares. You just need to be in contract by April 30th, close by June 30th. Now, these are hard deadlines. The IRS has made very clear that you go into contract May 1, it's too late. You got to be in contract by April 30th. And in some cases, if you're on the West Coast, there's been some interpretation of this that says you have to be in contract by 9 p.m. Eastern Standard Time. So make sure you check with your accountant about that as well. And do not think they're extending the program again. They've extended it twice already. there doesn't seem to be a lot of momentum to extend those deadlines and expand the program again. And also keep in mind, there's a lot of people who want to take advantage of this program. So by the end of April, there's going to be a lot of people trying to get into contract. And boy, by middle of June, it's going to be a busy month. There's going to be a lot of work for closers and title people and attorneys if you're in an attorney state, and lenders are going to be overwhelmed. Don't leave things to the last minute. Pay careful attention to those deadlines. Be prepared. Start now. Number 4 of the things you need to know about the home buyer tax credit. It applies to any kind of home. You could be buying a house, a single family home. You could be buying a multifamily home. You could be buying a condominium. You could be buying a co-op, a townhouse. You could even be buying a houseboat or an RV or a trailer. Now, if you're buying a houseboat, RV, or trailer, make sure you check with the IRS. You can give them a call and ask about your particular circumstances and whether you would qualify buying this kind of home. Not a lot of people are buying that, so it's a little murky. But any other kind of home is fine. The only restriction is the home can't sell for more than $800,000. If it sells for $800,000 or less, you're okay. $800,000 and 1 cent doesn't qualify. You don't get any piece. It's not like they prorate it out. 800 is a hard stop. 800 is okay. 801 is not okay. So that's number 4. Number 5 of the things you need to keep in mind is that you can take the tax credit, if you're eligible, off either your 2009 taxes or your 2010 taxes. So let's say you close in March, okay? And let's say that in 2009 you didn't have such a great year. A lot of people didn't have such a great year in 2009. So your income is below those income limitations for your 2009 income, but in 2010 you're hoping to have a bigger year. Well, you can take that credit off your taxes that you'd be filing April 15th. Close in March, file in April, get the credit right away. You can even get the credit off your 2009 taxes if you close after April 15th, so long as you close by June 30th, by either just extending the deadline, just getting an extension on your taxes for your return, or even if you file the return on April 15th, you can always file an amended return after that, after your closing, to get the credit. You do have to close before you can get the credit. You can't get the credit prospectively with the idea that you're going to buy something in the future. But you can take it off your 2009 taxes. So if you didn't hit the income the income guidelines last year, and you think you might hit them this year, well, that's great. You can take them off last year's taxes, get the credit that much more earlier. Okay, so that's the 5 things you need to keep in mind about the home buyer tax credit. It's not just first timers. The income levels have been raised, 125 for singles, 225 for joint couples. 3, deadlines, April 30th and June 30th to close. Number 4, works for any kind of house up to $800,000. And number 5, you can take it off your 2009 taxes, or if you wanted to, off your 2010 taxes. There are a lot of other restrictions and conditions. So make sure you do 2 things. 1, go to homebuyertaxcredit.com, check out all the resources, take the eligibility test. And 2, of course, as we always say, check with your accountant. Thanks for your time.